When you can actually see your profit for the year in dollars and cents, it gets you more in the notion of selling corn, knowing that I can lock in a $50,000 profit or whatever the profit is. You want to lock it in. If I know I can make that much profit in a year, I will be in business next year.
Good afternoon, welcome to GrainTV. My name is Cody Bills. Today is August 27th. It's a Thursday, which means we had export sales out this morning. But before we get into that, let's turn over to the grain hedge trading platform and see where we closed off the day. Corn trading up 1 1/4 cents, soybeans up 12 3/4, and wheat in Chicago here down 4 1/2 cents on the day. Keep in mind that this mobile platform is something that you can have access to. Give us a call. You can take a demo, a 14-day demo at grainhedge.com and see for yourself. See what it's like to have live quotes, be able to execute trades all from the palm of your hand. Now let's talk a little bit about soybeans and wheat. We had some news that applied for both of them. First of all, soybeans rallied here, and I think a lot of it had to do with the fact that China was finally able to close positive on the day. After selling off for a significant amount of days here, China was able to close, or Chinese markets were able to close over 5% higher. So that was positive to see. The fact that they were able to turn around, at least for the day, that took the foot off of the selling pressure here, allowing soybeans to kind of rebound a little from the selling we've seen. We also had positive news out of the U.S. We had GDP higher than expected, announced at 3.7% annual rate. That's up from 2.3% last month, so that was very positive. We also had unemployment coming better than expected. Unemployment claims slipped 6,000 to a seasonally adjusted 271,000 for the week ending August 22nd. So positive U.S. news. That allowed the U.S. dollar to rally here, but it also was just in general positive, kind of helping the grains move higher. Now, unfortunately, wheat was not able to participate in the gains that we saw today. There's two reasons. First of all, the International Grains Council raised their global wheat production by 10 million metric tons to 720,000 or 720 million metric tons. They basically cited an improved condition out of Russia. So expecting to see higher production out of Russia, causing overall estimates here of global wheat production to increase, and that put some pressure on wheat here today. We also saw the International Grains Council increase their corn yield estimates, or the corn production estimates, by 2 million metric tons up to 968 million metric tons this month. So that was both, when you look at that, that was relatively bearish for those two commodities. Also, Egypt's gas, they issued a tender on Wednesday. Today they announced that they purchased about 60,000 metric tons of Russian wheat for $180.47 per ton FOB. So all that doesn't seem to bode very well for wheat. Higher production, and Egypt purchasing Russian wheat, which continues to be very competitive relative to U.S. wheat on the global market. Let's talk a little bit about export sales here this morning. We had export sales. Old crop sales for corn and soybeans were abysmal. We had cancellations of 131,000 metric tons. Soybeans, 131,000 metric tons also canceled. And then wheat here, they came in on the high side, actually beating analyst expectations with 572,000 metric tons sold. That was up 60% from last week. Now, new crop, totally different story. We had very strong new crop sales. We had 986,000 metric tons sold. We also had for soybeans 1.4 million metric tons sold this week. So both very strong export sales, beating analyst expectations significantly and nearly doubling what we saw out of last week's export sales. Take into consideration that this week we've seen 3 reportable sales on Monday, Tuesday, and then Thursday. This morning we saw another reportable sale for new crop soybeans. I think next week is also going to be another week of strong new crop export sales. We need it because we are behind the typical pace that we are at this time of the year. We're about 68% compared to, or 68% sold compared to what we typically see when you look at the 4-year moving average. So we need these sales to catch up to the pace needed to meet USDA expectations. Guys, that wraps up today's show. If you have any questions about what we talked about today, please give us a call. The number is 877-472-4607. And remember, if you haven't done so already, take a demo of that trial, see what it's like to have that platform on your desktop, have that platform on your phone, and be able to call in and talk to a broker about your own marketing strategy. Thanks a lot for tuning in. We'll see you here Friday for the weekly wrap-up.